Well, we're back with you, and in case you just tuned in, we did have an overnight export sale announced by USDA this morning. In fact, we had two. We had them both soybeans. Soybeans, we sold a batch of 136,000 tons to China. Not a big surprise. That's been happening quite a bit here lately. And again, they want it for delivery for the next marketing year, not for now. So that's not a big surprise either. Kind of a concern, but not a big surprise. Now, we also sold 120,000 tons of soybeans to unknown destinations. That sale is for immediate delivery. So just add that to the ledger there, and we'll be accounting for that here in like a week or so. Now, let's take a look at our current prices here on the board, and the quotes are provided by bar chart, and things are hopping again today. Well, we have the May corn quoted 29.25 higher at 685. We sold it off right after the open, bounced back up, and then it's just kind of stuck there. So 685.25. It had been 30 cents, I believe, higher last time we checked, and it's about the same now. December up 19.5. We're at 599.25. Oh, so close to $6. Had been up to 604.25. Now on soybeans, you have the May contract really starting to get ahead of steam behind it again. 52 higher now at 1637, make it 52.5 higher at the moment. And we have July 48.25 higher. Now let's look at the November new crop contract. It's up 35.75 cents at 1450.75. But once again, nothing new, losing ground to the nearby contracts in that spread. Now let's move over to the wheat in Chicago. May 48.75 higher at 908.5. And that's still a far cry from when it touched the limit up overnight. It got as high as 934.75. Still 48.5 cents higher. That's nothing to sneeze at right now. Now let's take a look at our Kansas City market, and let's go to that same May contract. 45 cents higher at 936. And that one is 30 cents off of its overnight high, which would have been limit up at that time. And I mean expanded limit up. Spring wheat trade, the May contract 25.75 higher now at 986 after it hit a high last night of 1017.75. So everything sharply higher. I want to welcome aboard Chris Swift of Swift Trading. He's based here in Nashville. He joins us on set here right now. So thanks for coming in.
Good morning.
You brought some big prices with you.
Yes, absolutely.
Kind of a continuation of the volatility that we had last week. Is it going to do this all year?
For quite a while, because we're still very void of the information that we really need to know in the grains, and that's the March 31st planting intentions, how many acres of corn and soybeans are going to go into the ground, and whether or not we have the ability to get nitrogen fertilizer, and at what cost are we going to be able to do it. And then we look at the inversion of the carry, and we go, my goodness, there is no need to store anything right now because they're going to pay you the highest price today for it.
And we have more and more concerns about fertilizer these days. And I'm hearing stories that there may have been fertilizer plants attacked in the Ukrainian attacks from Russia there. There may be some ships that may have been affected. That's all we need.
Sure.
You know, just take and put a dent in our fertilizer supply this year too yet. Could that have an impact on the acreage?
Oh, absolutely.
And I'm hearing it could even have an impact even in Brazil, right?
Oh, no doubt whatsoever, because it's a world market. You know, we look at grains as a world market, and we look at how much investment there is into South America from other countries. So absolutely, it is a world issue right now, and that unavailability of it is probably much more crucial than the price alone, because if you can't get it, it doesn't matter what the price is.
And then that leads to a domino effect. It's going to affect the price down the road. The planning decisions will definitely affect the price, and that will affect the livestock trade. And so I want to take a break right here, and then we'll come back and we'll talk about that aspect of it when we come back with this guy here, Chris Swift, right after this. Well, we're back talking with Chris Swift. He's with Swift Trading in Nashville. Okay, now to the livestock side, and let's go straight to the prices here and see what's going on. We'll go to the big board with our live cattle market here first, and then we'll talk about some of the supporting factors. So you currently have the April live cattle quoted 72 lower. We're at 141.20 after a high this morning of 142.55, so a little weaker there. Let's take a look at our feeder cattle trade this morning. We currently have April feeders down 295 at 161.80 per hundredweight, so we're definitely feeling the heat from the sharply higher corn market. Gosh, we're $2 off of our earlier high, $2 and a dime actually from our earlier high this morning already. On the lean hog trade, you now have the April contract down a dime at 103.57, but all the other months are a little higher. You have the May gaining 25 cents at 108.07. So let's go back to the cattle market here. And Chris, talk to me about the cattle on feed report that came out Friday.
Okay.
It was as expected. To me, it looked like a real yawner. You say no. Why?
Well, we're kind of interested in the placement number because clearly the placement number reflects the number of cattle that were placed on feed in the month. And we had heard many rumors of a lot of cattle being pulled off the wheat pastures early. So when we pull those cattle off early, we assume that the majority of them go on feed, but yet we only saw a 99% placement. So were that heavy pull not to have materialized, what would the placements have been then? So there's probably a lot of cattle maybe missing out there or have already been marketed. And we know the little bit of a negative number was the, I think it was 11.8 million head on feed. And that's a lot of inventory to go through, but we had lost some marketing on there. So that's where I think that the difference led us to the 101 is not only did we have, not quite the heavy placements in there at 99%, but the marketing at 97% kind of kept more cattle in the feed yard.
If that's the case, what do you think the placement number may be in the March report?
Well, I'm not real sure because it'll be for February, and we've heard the same amount of heavy pull on there. So I really don't know, but it's going to be interesting to see if those numbers don't pick up and we don't see a heavy placement as in 101, 102 for the month of February, and we know it's a few more shorter marketing days in there, then it's going to show us that we really are shorter of inventory than what we may have thought.
Let's look at that livestock summary that we had from Friday afternoon. According to USDA, we had a little bit of cleanup trade out there in the plains, as I mentioned. 141 to 142 caught the action. Now, that would be maybe steady to a little weaker than what we had the day before. I believe it was, 144, Chris? I think at midweek. Dress basis sales, 226 to 229. We'll call that steady to firmer than the week before. Carcass basis hogs nationwide were down 35 cents. Wanted to call your attention to the beef cutout values that came out Friday afternoon as well. On the beef side, they were mixed. So I don't know if we accomplished a lot there. The choice cuts were down 97 cents. Selects were up 86. But on the pork side, the carcass values were down 81 cents. They're still about $3 higher than they were the week before. What does that tell you, Chris?
I'm not real sure. We've seen the futures kind of stop going up for just a little bit the last couple of days. They've been down lower, and I think we're probably just leveling off on the hog market more than anything. We saw that exports were fairly good last week, and there's just been nothing dramatically to change in it.
Well, I'm glad you came in. Thank
Absolutely.
You. I appreciate it.
Always a pleasure.
Yeah, always good to have you with us. Chris Swift of Swift Trading with us. He's based right here in Nashville. Janet, back to you.